Brisbane's housing affordability crisis. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's look at this article from realestate.com.au. So, reports warn of Brisbane's worst housing affordability in a decade. Now, Brisbane has been the poorer cousin of Sydney and Melbourne, which is a good thing for someone getting into property. It's more affordable. Sure, the wages aren't, depending on your sector, aren't as high as the other cities, but housing is more affordable. You can get a decent-sized block for a decent amount of money. Now, the problem is, if you're coming from one of the southern states, if, say, let's bring up here, the asking property price that you're used to in Sydney is, over $1 million, everyone, for a three-bedder, 1.4 million. Or in Melbourne, if we're looking at here, come on, reload, 1 million. Then you come to poor old Brisbane, and you see prices for three-bedroom houses, once this reloads from SQM, sitting at 680,000. It's going to seem like a bargain. You're anchored at cheaper prices, guys. And this is the thing. When Sydney, Melbourne start to slow down a little bit, people will come to Brisbane. Better weather, much better weather than Victoria. I grew up there. You've got all the opportunities that you have in the other cities now. It's not, Brisbane is a country town, but not that much of a country town. You're closer, international airport, closer to Asia and other places in the world. Property's cheaper. Quality of life is good. You can get a decent-sized block, a decent home, and still have money left over. Now, with working remotely, people can maybe fly interstate once every now and then for a reasonable price, very affordable, and live here. So, new data shows Brisbane housing affordability has taken a big hit this year despite record low rates. Well, low rates don't have anything to do with it, do they? Sure, it means you can borrow more. It means that people that can borrow more will borrow more. And remember, we also have this Olympics, this bloody pipe dream that the government's spending money on. You know what? You know how they'll make their money. They won't make it through any bloody, tourism or any of that rubbish. No. It'll be property going up. It'll be increased rates from property. That's why all the councils are probably pushing for it. So, amid fresh warnings of what would trigger its worst level in a decade, research released by Moody's Investor Services Monday found the average Brisbane household now needed 20.6% of two incomes to afford repayments on new mortgages. While lower than the national average of 25.1%, it was a deterioration for the Queensland capital. Now, I want to bring up this definition here of housing stress, guys. Let's have a read through this one. So this is, housing stress is typically described as low-income households that spend more than 30% of their gross income on housing costs. Now, what we're seeing in this example is, the average household is spending 20%. So that's not low income. Now, this is the 30% warning is tied to low income because the higher your income is, the more flexibility you have. But let's just have a look at this chart here, looking at household income distributions. You've got higher income. If you're earning over $2,000 a week in a household, you're in high income, guys. I bet you people in Sydney and Melbourne don't feel like they're in high income when they're earning that. If you're in middle, you're just over 900 a week, guys. So not even 52 grand a year for a household. That's I have to be reading this wrong. This can't be right. And this is disposable household income, everyone. Then you've got lowest is 433. Okay, so we're not talking a lot of money here, guys. But there is a big difference between the high and the low. So you can see how this increasing will put more stress on people. If mortgage lending rates rise from the current average of 3.45% to the 10-year average of 4.79%, the affordability measure will increase 3.8 percentage points to 28.9% nationally. The research found that lending rates would have to rise to 5.8% for Brisbane to be at its worst affordability in a decade, while Sydney would hit that at 3.87% and Melbourne at 4.3%, 8.7% for Perth and 6.2% for Adelaide. But it warned, if house prices rise a further 10%, then interest rates will only have to increase to 3.8% to push the housing affordability measure above the 10-year peak of 28.9% for Australians on average. The data showed affordability had deteriorated significantly across all the major capitals. It worsened because housing prices increased strongly, while household incomes were stagnant. Mortgage lending rates declined, but not enough to offset house price gains. Over the rest of 2021 and into early 2022, we expect housing affordability will continue to deteriorate moderately because property prices will continue to increase, while mortgage lending rates and household incomes will stay broadly steady. But while ongoing property price rises were to blame for the affordability slump for new borrowers, it also meant banks were less likely to be concerned about current mortgage holders because borrowers in financial difficulty were more likely to be able to sell homes to repay debt and avoid default. Housing affordability is calculated as a proportion of the monthly loan repayment amount to the monthly average household income, using rolling 3-month median housing sale prices, an 80% loan-to-value ratio, a 25% principal and interest mortgage term, and lending rates equal to the average discounted variable rate for owner-occupiers published by the Reserve Bank. So there we have it, everyone. So let's have a bit of a talk about this one. So honestly, I'm not surprised. We're going to see more and more demand for property in Brisbane compared to Sydney and Melbourne. Brisbane's catching up, everyone. There's even more auction clearances happening here in Brisbane. You're going to have the Olympics. That will fuel demand for property. There you go. What do you reckon? Looks like our chance to get in the market here is, it's starting to slip away in Brisbane, guys. Well, thank you all for watching. If you like that show, I'd suggest you check out this one here about house prices will grow 22%. Predicted to grow 22%. I can't say anyone is at all surprised. Thanks for watching, and I'll see you next time. Bye for now.